Okay, welcome back to the Fail Breakdown channel, everyone. It is Thursday, the 29th of January, coming into the end of the month here. It's been an exciting day after FOMC and some major earnings on Wednesday evening. Today we're going to talk about a couple of different trades. Obviously, we got a major elevated down sell off the open, and during that sell, there was a potential setup at 69.77 that we're going to talk through and perhaps what was there that made it potential, and then some of the warning signs around that trade. Touched very quickly on an intermediate trade at 69.49, which was really a level reclaim, and then the big one was the 69.23 that triggered a little bit later on. So with that, just a reminder, quick disclaimer: neither of us are experts. We're just doing our best to relay everything we've been taught from Adam, following Adam for a number of years. So, as always, defer to him for the full breakdown, which we will see later on when the newsletter comes out. Okay, with that, let's bring in some charts here. Where's the trading view gone? Okay. Alrighty, so as usual, got the 4 hour on the left and 15-minute on the right here. It's, what time is it now? It's about 3:40, coming into the last 20 minutes of trading, pushing back up almost to where it all began, where all the excitement began. So obviously on the back of FOMC, we had the FOMC low at 91, and then when earnings came out after hours, we put in a failed breakdown of that level, and that was active coming into the morning session. We opened up the regular trading hours about 7,015, and then very quickly the tape started picking up speed, and we commenced a fairly rapid elevated down sell into really what was the first level of significant interest, which was that low from earnings, the flush low at 69.77. So why don't you take over here, and I'll grab another chart while you're talking, and drag that in. That will show it in a little bit more detail.
Yeah, so, full disclosure, this was not a well-executed trade on my part, so I can kind of talk through kind of what I saw and my thought process through it, and I guess at least, analyze it now why it didn't work. But at the time, right, I'm kind of watching the 69.77 failed breakdown. I noticed a couple of things, right? So right off the bat at about 9:45, we kind of sweep it by about 4 points down to 73, and we immediately reverse and kind of head up essentially to back to 91. Well, there's nothing to really trade here on my end, right? I mean, it's just a quick flush below and back up. There's no acceptance, there's nothing. It's just a quick kind of sweep under it and bounce up. So at this point, it's either, two options. One, wait for a non-acceptance protocol, or second, wait for some acceptance here. So I thought we started seeing some type 2 acceptance here. Around 9:50, we flushed back down and cut underneath 77 down to 73. And then by 9:55, we kind of returned back above 77, and honestly got back with some decent momentum. We kind of got back 12 points from 72 all the way up to 84 quite quickly within about 2 minutes or so. So the momentum there started looking quite nice with the type 2. And I kind of took a stab there. And, obviously that did not work out well, as we had a quick flush down and, essentially got rid of that low and kept flushing down to new lows of the day. So a couple of things here, that I think are important to review. Number one, definitely the speed of the cell and the tape was definitely extreme. Like, it was extremely, extremely high. And I think, it probably have to be a bit more careful when that's happening. And really make sure price is settled. And I think probably rushed, my entry in terms of just not waiting for price to settle properly. And the second thing being, We did have some structure at 6986 from the evening last night. And, we did reject there essentially once already. So it might have been better, just given how fast things was moving, to just wait for that to clear for some extra confirmation, which we never did. And so, I would really pinpoint it to those two mistakes for myself in terms of what I can learn from that and why that potentially just didn't work out.
Yeah, and I'll just add to that based on what I'm showing on the screen here. When after the open kicked off, the rate of descent here on this first 15 minutes was pretty violent. I used the gradient from low to low, so from this candle low to this candle low, we'd sold at more than 2 points per minute. So that's a 30 point 15-minute candle there, and that to me is kind of hands off. That to me is like an early warning sign of like extremely volatile conditions, where volatility turned up to 11, and I know from my experience those are not conditions that I do well in. So that was really the one thing for me that stood out as like, hey, sit back, I'm not gonna touch this. And then just the point you were making, just flicked over to the range chart. We had quite a lot of different significant lows in this area. um, we bounced, rejected off 91, and then the type 2 swing you were talking about came back, um, and couldn't get above the 86 there. So I think at the time Adam was saying wait for 95 needs to reclaim. This was kind of the breakdown level that he had in his chart. And whenever he's messaging tweets like that, it's always worth paying attention to them. I know, again, speaking from experience, when I've ignored those in the past and thought, oh, let me try this level or what, yeah, often doesn't work out well. So again, using those tweets as just a guidance throughout the day is really helpful. So yeah, main thing, volatility was just too high. I think the easiest invalidation to pick up on quickly there. We also
Yeah,
saw it in.
and like we talk about, I think, you have a day like yesterday where, volatility is, on a scale of 1 to 5, it's at a 1 versus today, you're kind of at a pretty I mean, honestly, I would argue that morning sell was maybe even higher than a 5 out of 5. I mean, we were selling quite quickly.
Yeah.
And so I think, when both of those things are happening, I think you need to kind of be more cautious than normal
Mm-hmm.
and make sure that you're being even a bit more patient, and not just kind of entering it on a whim's notice.
Yeah. I also monitor the speed of the tape, dial here. You can see right now we're ticking along at about 150, 200 ticks per 15 seconds. During this sell this morning, it was upwards of 4,000, 5,000 ticks per second. It was just absolutely insane. But yeah, just a passing dig. We're back at your 77 level right now. So if you just held it, you would have been fine.
Oh, I know, right? I mean, all you have to do is just hold through 70
Yeah,
points of drawdown. It's nothing
no
crazy.
big deal.
Nothing
So yeah,
crazy.
I've got a lot of these points in a slide at the end, so I'll bring that up at the end, and then a few other points around. It's just some thoughts we kind of collected from a little bit of an early discussion. I'll throw in at the end of the recap here. So, all right, anything else on the 77?
No, that's it for me, I think.
Okay. All right, jogging on. Then I'm gonna leave the same chart on. I engaged in the 69.49 trade here, which was right around 10:20 Eastern time. And what I liked about here was by the time we were getting down here, the selling pressure was starting to subside a little bit. The speed had slowed down, and it wasn't all selling. We were getting some reasonable buy rotations coming in. We kind of had a micro flush of 49, pop back above, and then a proper flush. And then what I liked about this is we back tested the major 69.40 level, bounced, and then just put in what I saw as pretty decent acceptance of the 49 level. and then popped above and was able to get a level to level move out of here. Couple of key points here. I think you made it earlier, which is a really great point, that these types of elevator down sells, how do you say it, never end in a level reclaim. And this was just a significant level. It wasn't really like a significant low. It wasn't a daily low. It wasn't a V-shaped low or multi-hour low. So it was just a support and resistance level that we were reclaiming here. Um, and so yeah, these types of elevator down sells, yeah, there's never always in markets, but almost always end in a traditional failed breakdown, a liquidity sweep of a significant prior low. We didn't have that here. So that was kind of one takeaway from this trade. And then also, given the speed of the sell coming down, clearly bears were in control. Probably what I should have done was cut the 25% down to 10% break even here. Instead, I trailed it under the flush low, and this trade stayed green, but not very green. So yeah, little lesson there. Just being aware of context and when to take profits, when to hold them, when to fold them, that kind of thing. So with that, now let's get on to the big one. Unless you wanted to make any comments on that one, I know you didn't trade it, so
Yeah, no, I think you touched on that
okay,
quite well.
cool. So the big one was lost my trading view chart. Where are we? Back down here. 69.23 was the major, which was actually really my first sort of gold standard or gold quality significant low to trade this morning. So I'm just getting rid of that to get rid of the. So let me just bring up the 4 hour and we can just touch on what the level actually was. Nope, can't see it on the 4 hour. What was the 22 level? So the 22 level is this low from Monday, about 4 a.m. I think I might be zoomed in too much, but a significant multi-hour low, not a daily low, but still a very significant low. And by the time we'd flushed under this and came back to it, one thing to note, just real simply, if you're just using the 15-minute chart, which is what Adam recommends, we hadn't had a single green candle up until this point, and recovering the 69.23 was the first kind of green candle we'd got all day. So that right there, if you want to keep it super simple, is just something to consider. But let's drop down the time frames. You want to kick us off and see. So we flushed 23 through 11, bounced right at the kind of flag supports, and pretty close to. We got a couple of nested bull flags here, pretty close to both actually. Maybe the larger one's a little bit lower, but
Mm,
that was right at 6,900. And you can see how
yeah.
the selling pressure has just started to curl, started to subside, and then we get a nice lift. And I'm going to go back to the range chart because I really struggled to sort of see the swings here. But we got a couple of sort of lifts of type 1 acceptance. It's debatable whether you would consider them. I'm really interested to see what Adam says about the lift at about 11 a.m. this morning. That got to 19. So is that close enough to 23 to consider that sort of a first dose of acceptance? Maybe. Then it flushed a little bit lower from 901 down to 98. So probably not deep enough there to invalidate that first round. If we'd gone, 5, 10 points deeper, then you might want to see more acceptance. And then we just rocketed straight from 98 back to 23. So that was the slightly off-putting thing about this one. I was really hoping it was going to hit the level from beneath, dip, and then push up through. We didn't get that. So then it was, when we didn't have the type 1 acceptance, it's then deferred to either type 2 or the non-acceptance protocol. For me, I waited for type 2 acceptance here. So it had pushed up above the danger zone and it held there for a few minutes. and it was starting to creep away. And at that point, I was kind of in the mindset that, like, if this goes from here, I'm just going to have to let it go without me because I'm not about to long. It would have been 35, 40 points off the low. So I was kind of in that. I was like, it's either going to dip and give me type 2 acceptance, and I'll get in, or it's going to lift and go without me. That's where I was right as we were touching like 35 for the first time. But thankfully we dipped and I was able to jump in. Reasonably happy with my entry. I think we ticked under the level by a tick or two, then popped above and got in. But I think you played the non-acceptance protocol, so two different ways of entering here.
Yeah, you executed this better than I did, to be honest. I did not love the way this set up. So, I'd be curious to see, if that type 1 acceptance there at 10:55, where we kind of hit close to 21 and dipped, we kind of started putting in some type 1 acceptance. The issue with that when we came back up at 11:10, at least to me, was the fact that we were kind of coming 20 plus points off the lows
Mm-hmm.
directly. And so I kind of wanted to see one more dip or round of acceptance before just, blindly taking the long. And especially just because, of sellers had basically been in control all day. I wanted to see a little bit more conviction before just jumping in. And unfortunately, we never got that right away. So we kind of started zooming pretty fast above the danger zone. So at that point, I'm looking for non-acceptance protocol. The issue is, within a couple minutes, we already essentially hit 37. So with the profit take zone of 35 to 40 was already being hit. So I didn't love that. I gave it another minute or two and I ended up kind of taking an entry around like 32, 33. Um, and then, obviously we dipped back to 23 for a little bit of formal type 2. And, I think that's when you got the entry, which honestly was probably better if I just waited an extra minute or two. Um, but, I was trying to just, get an entry there because we had already kind of been holding, quite firmly well above the 5 points. Like it wasn't just like 5 points, we were barely dangling on. It was like, we were kind of above it by 5, 6 points. And so I kind of wanted to get in before it, potentially took off too much further, given that it was already kind of nearing profit takes. Um, I did kind of play my system there sometimes. I think I've mentioned where, I'll kind of take a first ad and then if we get even better acceptance, I'll kind of go in with another ad.
Mm-hmm.
And so I did that here. So I did end up taking another ad once we had that formal type 2 around like, 26, 27 or so. So I think my average fill ended up being around like 31. So for me, I wasn't able to take the trim at 35. It was still a little too tight. And honestly, I've been trying to get better about, just trying to finding out when to be diligent about profit takes and when to kind of let it run a little bit. So in this case, just because of how much we'd sold and the volatility state we were in, I was kind of looking closer to 40 for my first profit take, which, we ended up getting that.
Yeah, I held my second, and not quite to 40. I think it was like 37 or 38. Because by the time it had been kind of chopping around, struggling, and 35 was such a brick wall. And having had the first trade only get one level, and then the 25% eat a lot of the profits there, I was keen not for that to happen again. What's stunning about this is the extent of the moves, and then the little piece of the pie I took out today is it's so small for that first profit take. Like on this range chart, I don't know how many bars are on the screen right now, but my trade is three of these bars.
Also, do you see where we are now?
Yeah, I know you just hit your first target for that first trade, right? I'm just drawing a box like that. That box right there is where I was in and out for my first profit takes with for all of the action. I got my 6 points and ran, but I've still got the runners, so that's good, and they're working nicely now. Okay, All right. Anything else you want to share on that one or add? I think that this, I would say today is like textbook, like elevated down day where
Yeah.
we go 100 points down. Like anytime we're trucking like 50, 60 to 120 points down, they're all very similar. Like you get a whiff of a trade halfway down, maybe two of them on the way down, which we touched on, and then the big one at the end. And so it's always just best to, if you can identify early, identify the madness of the sell through that extreme volatility, the speed of the tape, or the rate of the descent, or whatever you use, and then just wait for price, wait for the speed to slow down, wait for the sellers to start to build and the sellers to diminish and the buyers to step in a little bit. But it takes time. It's a process. It's not gonna. You don't need to worry about missing it because it will. It's not just gonna ping off the first level it hits and rip.
And you know what? That brings a good point. Even with the 21 failed breakdown, it kind of gave a lot of time to enter. I mean, I think anytime really between 11:20 and 11:40 for 20 minutes, what didn't really move much
Mm-hmm.
before it really, I think, at noon started taking off. So you really had like 30 minutes to really enter. And I think so, that kind of goes back to your point of like, I think it's good to acknowledge that when before it takes off, it will give you chances. It's not like it's going to be if you don't get in within this 1 second, you're going to miss the station. And I think, sometimes we have to kind of constantly remind ourselves of that.
Yeah, and I think if you'd missed that, you could have also traded the 69.40 level. Adam was tweeting, I think at this point, 69.40 needed to reclaim for bulls to take back control. And the nice thing about that level, it was a good support. It's a major level, and we put in a bit of a bounce of it on the way down. We went from 40 up to about 60. So just about meeting the criteria of a significant low, and then we put in some great acceptance of it coming up into the level from beneath right around midday. That clean type 1 acceptance where we just hit it perfectly from beneath, drop, hit it perfectly from beneath, drop, and then push through with momentum, and you just get in a point or two above the level. Fairly straightforward on that one. So there's always other opportunities around the corner if you miss one.
Yeah, I would agree.
Okay, with that, I'm just gonna bring up the slide at the end, and you guys can just kind of read through that in your own and see if that helps. Other than that, I think it's been a fairly good week. We will catch you guys in the Discord for Friday. Probably be taking it easy for me Friday, and yeah, maybe this runner can just go to the end of the week. That'd be nice. All right, signing off. Thanks everyone. Bye. Okay, so here's the slide with the key lessons learned from today with the three trades we've talked about. The potential at 69.77, I think the main thing there we touched on was just volatility was too high. A couple of screen grabs here. So the extreme rate of descent with the gradient showing here. Whenever we're getting down here at like 2 points a minute, for me personally, it's just hands off, let it settle down. And you can see here on the speed of the tape, I think when we were talking, it was in the typically like 200 to 500 range ticks per 15 seconds, and this was a screen grab from earlier this morning when we were knifing down, but we were consistently hitting these numbers like 5,000 ticks per second. So that for me is when volatility is just too extreme, and too extreme for me personally to trade successfully, consistently anyway. So yeah, that's the major first point there. Second point, we invalidated the prior failed breakdown of the FOMC low at 91. So that's a slight warning sign, although we do often kind of have this condition when we're trading a lower failed breakdown. But this is kind of a key point when you were looking at that type 2 acceptance. We have multiple levels in the area, the 76, 86, and 91. And with these swings of acceptance, it first rejected off 91. and then on the second bounce it rejected off of 86. So just paying attention to the structure around the level you want to trade. And at the time, Adam was mentioning that 95 had to reclaim to trigger up, and so obviously, and it never got close. It had rejected off of 91 at that point. And then this was just some of my own thoughts, really. The at that level, the flush was only about 4 points, the initial flush, and relative to the size of the flush, the volatility was very extreme for that size flush, and then the type 2 acceptance swings was like an initial like 15-point bounce up on top of a 4-point flush, so just kind of seemed a little out of balance. So yeah, those are main points. Main point, and the one that we can all quickly identify is just volatility too high. And then at 69.48, that key point, elevated down cells don't end in a level reclaim, only a traditional failed breakdown. So it's just something to be aware of when we're in that mode. And then for me personally, I probably could have trimmed my 25% down to break even when it fell short of the second target, and that would have kept a little bit more money in the bank. We're still able to stay green on the trade, but not particularly significant. And then from 69.23, I don't think it's any particular lessons from this trade, but I would say it is a textbook failed breakdown after one of these huge, scary 100-point flushes. So definitely worth studying. I've studied them in the past, and there is a section in the manual on trading macro failed breakdowns, so you can kind of check that out, and it talks about some of the things we saw today. So with that, we'll call it for this video. Thanks. Bye.